Let's see the big stories in the world of business. Nigeria's Deposit Insurance Corporation, NDIC, advised Nigerians to exercise maximum caution in the adoption of cryptocurrencies as the preferred mode of financial transactions. Federal government, states, local governments share 762.6 billion naira allocation in the month of June. Our focus today is on the oil and gas industry in Nigeria. There is a special interview, one-on-one and exclusive interview with the Managing Director of Mobile Oil Nigeria PLC, now Double One PLC. That's after partnership with NIPCO, Mr. Tunji Oyebanji. Welcome to the show. The federal government has introduced a plan to resolve challenges in the power sector and expand capacity for needs in Nigeria. This was made known by the Director General, Bureau of Public Enterprise, Alex Oko, in Abuja. Mr. Oko says the Nigerian electrification roadmap is structured into phases, as the first will focus on implementing projects that would improve power supply within a short period of time. The next phase will increase the system's capacity to 25 gigawatts within the long-term planning period, with upgrades and expansions in generation, transmission, and distribution. He adds that the aim is to deliver an additional 2 gigawatts to the grid to reduce ATC&C losses and achieve improved grid stability and reliability. The Managing Director and Chief Executive Officer of the Nigerian Deposit Insurance Corporation, Umaru Ibrahim, has advised Nigerians to exercise maximum caution in the adoption of cryptocurrencies as the preferred mode of financial transactions. NDIC CEO warned that while various forms of digital currencies currently in operations have their positive and negative attributes, those who patronize them risk losing their savings. He adds that the medium is the largest unregulated and does not support or have any support from the traditional central banks in almost all financial jurisdictions. The NDIC boss made the remarks during the courtesy call by the board and management of the corporation to the Speaker of the Federal House of Representatives, Right Honorable Femi Gbajabiamila, in his office at the National Assembly Complex in Abuja. 762.6 billion naira was shared amongst the three tiers of government for the month of June. This was higher than May's, owing to increases in all forms of revenue. Lara Folayo reports.
The gross statutory revenue for the month of June was 652.9 billion naira. This was higher than May's figure by over 81 billion naira. The value-added tax and exchange rate gain both saw increases from the preceding month as well. This helped push up amount shared to over 762 billion naira.
The gross revenue for the month of June, which is being distributed in this month of July, is 652 billion 949 million naira. And VAT gross again is 108 billion, as I've mentioned above, 631 million. There is also the exchange gain difference of 1 billion 17 million naira. In total, what is being distributed, looking at these three components, is 762 billion naira, 597 million.
The balance in the excess crude account, which stood at $63 million at the last revenue allocation meeting, is now almost double its former amount.
The present distribution with the previous distribution. The balance in excess crude account as at 24th of July 2019 is $111.2 million.
Revenue from the petroleum profit tax and companies' income tax also recorded a rise. The next Federation allocation meeting will hold towards the end of August. Lara Folayo, TVC News, Abuja.
It's really interesting to see this improvement from 652 to about 762 billion for the month of June. And also excess crude accounts rising almost double at the moment, 111.2 million US dollars. Seems Nigeria is ready to save for the rainy days. Let's see how it plays out. Moving on now, Nigeria's oil and gas industry has witnessed ups and downs for some time. Clearly, yes, a lot of issues surrounding that sector. Efforts at diversifying away from oil has not also yielded substantial results. Many have called on Nigeria to move away from a monocultural economy that's heavy dependence on oil. We'll all remember what happened at the time when there was a sharp drop in the price of crude oil, the negative effect on the Nigerian economy and other oil-producing economies and, generating revenue from that sector. We know what actually happened, and we went into recession, was able to come out. There was an exclusive, I was able to get an exclusive interview with the managing director of Double One PLC, formerly Mobile Oil Nigeria PLC, Mr. Tunji Oyebanji. He talked a lot about what is happening in the sector, what to expect from the minister, whoever becomes the Minister of Petroleum. But let's start with the issues relating to margins in the operations of the downstream sector.
It's a challenge. Obviously, the margin, like in any other business, is what we make between the cost at which we buy a product and the cost at which we sell. In Nigeria, that is guided by a template which is put together by the PPPRA. And basically that margin has been fixed now for several years. But at the same time, everything we deal with, all the various inputs, expenses and costs have been going up. As you know, we're running an inflation rate of close to 12% in Nigeria today. So even if you just take that into consideration, 12% every year for the last 3-4 years, you know what that means in terms of our costs, and yet the margin has remained fixed. And we are not the only players, obviously, in the value chain. We are marketers. There are people who have to transport the products and other things that we have to do as part of delivering that liter of fuel to the customer. So when you talk about sustainability, the question is how long can you continue? For us, it's difficult to survive on this fixed margin, and that is why I think the comment was made that is it really sustainable? Because if we are going to get an increase in our margin, then if the scenario remains as the same with a fixed price, then the only way that margin can come about is if you increase the price. So there are a lot of issues that we really need to address there.
There's been product availability lately. I think NNPC has been supplying products to major marketers. What's been the challenge with regards to supply and distribution of products?
Yeah, supply has been steady. I don't think we've had any challenges in supply now for almost the last 24 months. NNPC is primarily responsible for bringing in PMS into Nigeria. So to a large extent, they have made that available to everybody. So I don't think at this present time that is a major concern. I think if there's any concern at all, it would be how much we are paying for that refined product vis-a-vis the price at which it's being sold locally.
Or the issue of deregulation and subsidy, something that has been in the front burner of this sector. People have been talking about it. Should we pull subsidy out? How sustainable can we continue to sustain this process?
Well, I've said it many times. I think we are postponing the evil day. I think that ultimately we cannot afford to continue to do what we're doing as a country. The books just will not balance up because we have so much that we have to spend of both in terms of current expenditure and capital expenditure. And you know, we're having to borrow so much money in order to continue to fund government and finance government capital programs and so on and so forth. So it's a bit counterproductive when you are borrowing money at the levels we are, and at the same time, you're giving out things on this subsidized rate. It just doesn't seem to add up. So it's, I think, to a large extent, a political issue. But I've always said, you can't ultimately solve a political issue or an economic issue with a political solution. It's not going to be sustainable long term. So I think if we're not careful, what we end up doing is mortgaging the future of our children, because this money would have been better directed to investment in infrastructure, in education, in health, that kind of thing. Yes, countries subsidize different things. If you want to subsidize education or you want to subsidize health so that people can have access to it at cheaper rates. But when you subsidize petrol, first, the people across the border where the price is much higher than yours, much of what you are subsidizing within this geography finds its way, whether you like it or not, across the border. So in effect, you end up subsidizing other people. So we're suffering reduction in income as a country, only to use that to subsidize other people. So, the issues are varied. I don't think anybody should underestimate the challenges associated with it, because people have been used to paying relatively cheaper prices compared to other areas or other countries. But I think it's something that we can't keep on postponing the evil day. We have to tackle it head on. My recommendation would be that we should have a plan. What happens typically is that government finances get under pressure, and suddenly somebody is going to realize we can't keep on doing this. And what happens then is that an attempt is made to completely remove the subsidy. Then there's a lot of pushback, and eventually government then backpedals to a certain extent. So what you end up having time and time again is merely an increase in the price of petrol. Really what we need is a more comprehensive plan that is more holistic, which will eventually lead to complete withdrawal of the subsidy. That it can't be done, just with a snap of the fingers, but there should be a plan in place that says at the end of this period, we will be, removing the subsidy. Either we do it gradually or we have a process. And then when we make those savings, this is what we are going to do. You can have specific plans. We will repair or build these roads in these geopolitical zones. We will buy this number of buses, something that's measurable that we can all point at and see. So, how that will be tackled, I'm sure the new administration will take that up as they begin to settle down.
Well, we have a new administration and we expect new ministers to come on as soon as possible. The list is out. What are your expectations from whoever becomes the Minister of Petroleum Resources?
Well, my thinking is that, I generally like to see, round pegs in round holes. So I'm sure without being the one to teleguide or suggest exactly what should be done, I think it's important to put somebody in charge of the industry that has at least some exposure to the industry, who has some understanding of what the issues are, so that that person will be able to hit the ground running. There's so many issues that need to be dealt with, including, refining, what is going to be the future of the whole downstream in terms of this subsidy issue you talked about. All that is work that needs to be started as in earnest. In fact, we're already late if you ask me. So my expectation of the new minister, whoever that will be, and hoping it's somebody who has some experience in the industry, some exposure. While that is not an absolute criteria, definitely it will help.
Now let's look at Double One, known for high quality lubricants, products, and all that. The recent partnership with NIPCO, bring us up to speed with what's been happening. What are the positives? What should we expect more as we move on in Nigeria's oil and gas industry?
Okay, since April 2017, when the change took place, a lot of investment has come into place, both in terms of our fuel storage facilities, in terms of our lubricant blending plant. All this has been upgraded significantly. One, to make our operations much more efficient compared to what they were in the past. Also, to position ourselves so that if and when deregulation does come to the industry, then we will be able to compete effectively and be very efficient. Because don't forget, in a deregulated environment, you are no longer guaranteed any margins. So what you make is dependent on how efficient you are, what kind of service delivery you have, and so on and so forth. So for us, what I would say is we've been trying to upgrade our facilities. Some of the investment that we should have made maybe several years back, we've tried to catch up in those areas now, and hopefully that will serve us well for the future. We've also invested significantly in LPG facilities at our retail outlets. This we hope to expand because we believe it's consistent with government plans to take LPG closer to the people and make it easier for people to buy. So we've also invested quite a lot in some sales promotion activities, basically to reward our loyal customers for their loyalty over the years. So those are some of the things we've tried to do in the last couple of years.
Okay, in regards to MoMA now, the subsidy debts, before now there were issues around that. How well are we doing now? Has everything been cleared by this administration? Tell us about that.
Well, we have to thank the administration, because government has, especially since a lot of the subsidy payments or subsidy debts were not generated under this present administration. So an attempt has been made, and I would say a good percentage of what has been owed has been paid, albeit in the form of promissory notes, which are not exactly cash, but we at the same time must be grateful for what government has done, which has sincerely eased some of the pain. But unfortunately, many of the patients had died before this relief came. But for those who have survived, definitely it has brought some relief, but we hope that government will see it through and clear up all the remaining outstanding subsidy debts.
Thank you very much for your time, sir. Tunji Oyebanji, is there a lot of issues in the sector? Smuggling, subsidizing smuggling, subsidy issue. Should it be removed? Should it be retained? A lot of issues surrounding that. Deregulation of the oil and gas sector. These are questions begging for answers. Let's see how it plays out when we have a substantive minister of petroleum resources and see how we chart a new course for that sector. That is the sector that generates more than 80% of revenue for Nigeria. Now we'll take a break, and when we return, Effiong Ekop will be here to bring us up to speed. Let's talk some market. We'll be right back. Alpha Ekop.
Hey, Tolu, I'm fine though.
What did they happen now? Yeah, waiting day. I beg, waiting make we talk about.
We ended the week in red, very low.
Can you imagine?
There's nothing. There is not much from the entire economy that will encourage investors. That's the thing now. See, something must happen in the economy, and then information gets in here to ginger things up.
Thank you for staying tuned. Now let's talk some market and see how the week is gonna close. My colleague Effiong Ekop is joining us live from the floor of the Nigerian Stock Exchange, downtown Lagos. Ekop, let's know what's happening. I'm seeing it going in red. Bring us up to speed with the trading pattern.
Yes, Tulu. I tell you, the market continued bleeding, and it was really bad today. Index was down 0.26%, and that tells you the level of which investors, gone down in their investments. They have been losing a lot of money. As at the close of half year, exactly, we were 10% down this market. And since then, you can imagine what has gone down. Major companies that are quoted on the premium class, that is the highest level of quotations, those big companies, they are the ones dragging down the market. They don't seem to want, to the expectation lines that we thought with the list of ministerial nominees, market would, look in the positive direction. So they are rejecting, they are coming down. Look at the likes of Seplat, the big oil company. Seplat was down 6.67%. That's a very big one for one company in a given day. Then CNN, that cement company of northern Nigeria, was also down. Dangote Cement, the very big cement company that almost dragged the direction of other, was down 0.58%. And so with the combination of all these negative tendencies, the market dropped, the weekend. And so the other sectors followed and the market bleeded.
So we are leaving the week, closing the week in red. Effiong, let's touch briefly on bonds, the federal government bonds. This oversubscription at about 207%. That's quite impressive. So what does this speak? How does that come to you?
The bonds market is on the average, you could say it's a bit lively, in the sense that many of the enlightened investors have come to realize that it does not have to have that kind of embarrassing liquidity problem that they find in other sectors of the market. But the thing is that the bonds market is not that, it is something that is going to be of a corporate, enticement to big investors, institutional investors. But right now, it is the equities market that we focus on, and they have been able to, drag the investors' attention. The bonds market is coming up with the federal government enhancing activities in that debt sector of the market.
Finally, as we move on, let's touch on the banks. CBN is trying to make them lend, discouraging them from investing so much in treasury bills and other government securities. What do you make of this?
Yes, we are expecting the central bank to be able to force that particular regulation down the throat of the banks. We have always known that the banks don't always like to lend out easily to especially the real sector. So if it happens now, very good. The agri sector, for instance, we've heard so much about that, but small agri farmers, are they able to, source out the loans? No. That has been the problem. So we believe that the banking system, this time around, they are, taking a tough trend, because central banks saying they should also reduce the amount that they invest in treasury bills. Then if these two, are carried to logical conclusions, we will see a turnaround in the banking subsector. Don't forget, they will also need to recapitalize, and indeed, tough times are coming.
Indeed, tough times, and we'll keep a tab on it, letting Nigerians and everybody around the world know what's happening and the level of stability in Nigerian economy and even the banking industry, which is very important. My colleague there, Effiong Ekop, thank you very much from downtown Lagos, bringing us up to speed with a trading pattern. Before we go, let's tell you our prices trade mix at the international market as OPEC continues to struggle with oil glut. At the London market, the Brent trades low at $63 a barrel. The OPEC basket crude moves up to $64 for a barrel. That's our show. Thank you very much for watching. We'll see you on Monday. Enjoy your weekend.